Good, my people. Hope you are doing well. So today's this channel, I'm going to talk about how to spot a valid order block because I've had couples of questions from people on how to identify a valid order block. Although there are other complexes that are aligning to it before it can be called a valid order block, but I'm not gonna touch about those complexes. I'm just going to tell you how to spot a valid order block when you see them. So if you're new to this channel, please kindly like and subscribe. So the purpose of subscribing is for you to know when I drop updates on educational content like this, and like updates that could help you in your what do you call it, forest journey or a forest career. So yeah, so without wasting more time, let's just jump into what you have for today. So a lot of people struggle on spotting out a valid order block, of which I don't think, or some people mix how to spot out a valid order block with some other things. So I don't know, but I just want to make it clear to you now that in trading, a valid order block, another block is an let me just say what another block means. Another block is the last bullish or bearish candle before an impulsive move that leads to a break of structure. So that is just a simple definition of order block. A last bullish or bearish candle that the last bullish or bearish candle after an impulsive move that led to a break of structure. So with this clear definition, I think you should be able to spot out a valid order block even without me giving an example to it right now. So but let me not waste much time. Let me just touch on that. So looking at this, if you notice, you'll see some areas that I marked in this chart, although these are previous charts, but you see some areas that I mark. That areas are actually point of interest, my point of interest, which can serve as other blocks too. So yeah, so if you look at the chart from here, you can see this area I marked at. Yeah, this is a valid order block. I don't know if the market came back to react to this, but I was marking out this other block and waiting for the market to react to it in a short period of time, but it didn't. So the market moved. I marked out another order block. So if you check from here, I said another block is the last bearish or bearish unmitigated candle. Bearish or bearish unmitigated candle that led after an impulsive move that led to a break of structure. That's what another block is. If you look at this other block, this last bullish, look at this last bearish candle. You see this last bearish candle. If you notice, it wasn't mitigated. So that was why I marked it out of my other block. Another block like this are very high probability order block, and once it's aligning to the confluences that I want to see, to call it another block. Now if you look at something like this too, some people will call this another block. You see this large bearish candle after this move, many people call this another block, whereas this is not a valid order block. So why is it not an order block? If you check, you can see this leg, this candle leg here, this candle leg. Let me zoom it out. You see, you can see this candle leg here. This candle leg came to mitigate this other block before moving. So which automatically makes this other block not a valid other block again, because it has already been mitigated. What does it mean? When I say mitigation, what does mitigation mean? Mitigation means the candle has been touched. This other block has been touched by any other form of green candle or red candle or whatever color you're using your chart for. This candle now, if you look at this other block, it has been mitigated by this leg. You see this leg, this candle wick. This is called what do you call it, hammer or whatever they call it. So yeah, I think it's hammer. It's a hammer candle. So this candle now has mitigated this other block. So this is not a valid other block for me. If you can see this one, This one was not mitigated. Look at, if you notice this candle did come to mitigate this area. So that was why I spotted that as a valid order block for me. So yeah, let me look for another example, because areas of this order block I do market out very well. So look at this area now. I don't know if you can see this very clearly, but zooming out to the lower time frame, you see, if you notice, I took a trade from here and this trade went in profit before it comes out to take this other block back out. It comes back to take this other block out. So let me zoom out and see if I can see the clear other block that made me mark out this area. Let me check. I don't know how to. No, it's gonna take a little longer because that chart is okay. Is it this one? Not this one. I don't know if I can find that area, but supposedly, if you know what I mean. So these areas I'm marking are just my point of interest, and your point of interest can be anything. Once it comes to trade, your point of, okay, look at it. Your point of interest can be anything. Your point of interest can be breaker block, order block, fair value gaps, a lot of them. So yeah, you see, this other block I marked out. Yeah, look at it. I told you, if you scale that into the lower time frame, you see why I marked out this other block. You see, this other block was not mitigated. You see it here. You see this other block. You see, that was why this candle came and picked it out before going to the upside. Now look at another other block too that was not mitigated. I just spotted another one here right now that wasn't mitigated, and this candle came back to pick it out and start going to other to the upside too. Look at this other block too. You see this one? I didn't see this, but this one now is a very good order block. If you notice, it was not mitigated. It was not mitigated. Now this candle, this move came back and pick it out and started going to upside. So these are just an example of an order block, a valid order block. So for the bullish side, so for the bearish side, let me look for a bearish order block. Okay, I've seen one. Like I said, it should be an unmitigated bullish or bearish candle. When I mean bullish or bearish candle, in an uptrend, you look for a bearish candle. So in a downtrend, you look for a bullish candle. So like this now, this market broke structure, yeah, broke structure. So where was the unmitigated bullish candle? Look at it here. Look at the unmitigated bullish candle. You see the unmitigated bullish candle? It was this. So this market come here, it came here and picked it out. You see the market came here and picked this out and moved to the downside. It reacted on it, but it didn't give us much move. But this is to show you that this thing works. This thing works. So in spotting out another block, first thing you need to know, or first thing you need to have in mind first, you need to know the actual trend of the market before you pick out your other block. So then look for another bearish other block if I can find, because GU has been trending up for a long period of time. Look at another good other block here. You see, look at another good other block. If the market even came to pick it out, this one was unmitigated. If you see here, the market came to pick it. You see, the market came. Let me move this. You see, this other block, it was not mitigated. You see, this market came after doing whatever he did. He still came back to pick this other block because what this other block was not mitigated. So market moves. This is actually the way market moves. Market will surely 90% of the time comes back to pick a place that it was not filled, that it didn't fill. Like this other block was not filled, it was not mitigated. When I say mitigation means it was not touched by any candle when it moved to the upside initially. So this market had to come back to correct this movement. Most of the time why the market comes back, they actually do come back to correct movement. This was like some movement correction, like let me say something was not normal, so I need to come back to balance this before moving. So that was why you see this market came back to pick out this other block, this unmitigated other block before moving to the upside. So let me for example of a bearish other block. I think this one is a good example of a bearish other block. Although the market didn't react to it, it didn't go far after reacting to it. But yeah, look at in the lower time frame, you will see why I marked out this area. But in a higher time frame, like from this time frame, looking at it from this time frame, you see that this candle moved actually. It came back. This other leg mitigated it in this time frame, but in a lower time frame, you spot out something another block. You spot out another block that made me that made me mark out this area. So that was why I marked out this area as another block. But scaling out to the lower time frame now, you might not, for us to look for it, it might be difficult. Yeah, this is a very good order block, but it failed. So you see, the market is not always 100% assured. You see, this is a very good order block, but it failed. You see, it failed. So let me tell you the most likely reasons why it failed. You notice this market normally, if the market had broke this structure, came back, come to this area, pulled back to the upside, this market, this other block, we likely hold. But one of the major reasons why this other block failed was this market moved to a very long area. You know, it pulled down to a to a long distance of point. I don't know what triggered it for me. I don't know um the POI that it reacted to from here. But one of the major reasons why this other block failed was here. One, from this downtrend, I think this was um I don't know. Yeah, this was November 2025. Yeah, this was November 2025. So this market moved to a very far area before coming back. That was one of the major reasons why this other block failed. So yeah, another other block here that failed too. So I'm trying to show you that in as much as these stuffs work, they do fail too. So this one failed. Let's look at the reason too. You see, okay. One of the major reasons this one failed. If you notice, when this market pulled up to the upside, it came to this area. You see, it came to this key level. Once you start trading, you understand what I'm saying. It came to this key level, making it now a low probability order block. Why? Because from from here, this market have moved to the premium level. From here now, this market have moved to premium level. Let me use my example. Although I can't start teaching things like this, I just want to show you how to spot out and have a valid order block. So if you want to learn what the premium level, the discount level, and the rest of them, you kindly go to the link in the description below and buy my course. You see it from there. You understand everything from there. Look at another level, other block. You see this market, it gave me a good winning trade. So yeah, there are a lot of things. That's why I told you there are a lot of things to look out for before you mark this as a valid order block. But I just want to show you how it looks like I'm not here to start putting in the confluences together for you to know how the value order block is. The purpose of this content, or the purpose of this video, is to show you how the order blocks look like. Like something like this is not a valid order block. If you notice, many people might call this a valid order block, but if you see, something like this is not a valid order block because this market has been mitigated. This order block has been mitigated with this candle, so it's not a valid order block. Now look at another valid order block here. I don't know if the market reacted to it, but definitely should react to it. Look at the valid order block, another valid order block. Okay, see this market reacted to it nicely. It reacted to it nicely. Let me show you. The market reacted to it nicely. Look at it. It came here, it sniffed it, it came down, which is giving us a good risk to reward trade. I think 1:2 or 1:1.5, which is not a bad trade to take if you actually risking on this area. It's not a bad trade to take. Look at it. 1:2, yeah, 1:2.2. So yeah, these are just an example of this. The purpose of this video actually is just to show you how to spot a valid order block. I'm not just here to come and start putting the confluences together and the rest of them. So if you want to know more about how to put the confluences together and the rest of them, you just need to use the link on my description to sign up on my course. And look at another one, valid order block, downtrend here too. Let me just use this. You see this one, the market indicated it too. You see, it reacted to it from here. It reacted to it, started pulling down, pull down, pull down, pull down all the way to this area. So if you're leveraging on this trade, if you're risking on this trade, you see, let me see how many RR it gave. Yeah, from here to this point, it gave 2.2 RR, which is not a bad trade to take. So yeah, I think I'll call it a day with this. I think, yeah, this should probably be it because I've said enough about it, and I hope this video is helpful to some people. So if this video is actually helpful to you or you find value in it, please just like, subscribe and like.